take. For those of you that have been following the Pakistani startup space, you may know that we've seen the same cycle that a lot of other emerging markets went through in the last few years, where we had, a trickle of investment coming in, and then suddenly in 2019, 2020, there was a huge upturn in investments coming into Pakistan. Startups went from raising like 40 million, 60 million to 350 million a year after that, and continued that. However, as the global downturn set in, Pakistan also was not immune to that. Coupled with the fact that we have a very early stage ecosystem where we haven't seen a full cycle complete, we haven't seen significant exits, although we're starting to hear of M&A deals that have been done, as well as some strategic investments and buyouts. A lot still has to be proven, and so we are still seen as high risk, but the high return part has not been proven as yet. So we all have a task ahead of us, which is to dig in our heels, hang in there, and continue with the conviction that we've had, because everybody on stage over here has in some way, shape, or form been associated with the Pakistani startup space and has invested in Pakistan for the last few years. In terms of numbers, we we raised just over 40 million in Pakistan last year, which is a significant drop from, the 2 years prior. And this year, thanks to Hubble, I don't know if Omer is in the room. He's probably still having lunch. We've actually crossed 50 million already so far, and we're just closing the first quarter. So hopefully this year we'll start looking up. The way things are on the global front, we don't know, but that's the backdrop that everybody's working around right now in terms of uncertainty. So I think just to say that, from 2015 to now, in the last 10 years, Pakistani startups have raised a collective $1 billion. Now, that billion is a nice number, but when you think about the opportunity that Pakistan represents, it's a drop in the bucket. And that's why we're all here, because we believe that there is an opportunity in this market and that we're sort of building towards. So with that context, I'd love for each of you to please introduce yourself and maybe talk a little bit about what is your thesis on Pakistan, and then we'll get to specific questions. So I'll start with Aatif, and then go to William, Yalena, and Omer.
Thank you, Misbah. Hi, everyone. I'm the founder of Indus Valley Capital. It's an early stage VC fund focused on Pakistan. Started in 2019. We are on our second fund. Our thesis on Pakistan is that this is one of the largest untapped markets if you take the long view, and that's the view we take. There's opportunity everywhere to be our sector agnostic, but you heard from Bazaar, that was one of our earliest startups, and we've done edtech, we've done health, we've done fintech. I think the interesting thing about Pakistan is, even today, I just met somebody who's managing multiple $1 billion based in Dubai, which is such a short flight from Karachi. And they were like asking, when will Pakistan, get its act on the macro front together? So this is perception gap. In fact, we'll talk more about it, but Pakistan has, improved its macro significantly over the last 2 years, and much better than Egypt or Turkey or Nigeria for that matter. So within the emerging markets, so take India and Indonesia aside, Pakistan is where I think there's really exciting opportunity and work happening, and we're excited to bet on it.
Hi, William Albeen, Managing General Partner, Orbit Startups. So we're an early stage VC, global emerging markets. We invest, we help with our lifetime support program, focus on what most entrepreneurs want most. We help bring money, mostly in the form of sales. We help our companies get sales. And if you have sales, then usually investment comes after. And so we started investing in Pakistan at the end of 2019, done 20 investments so far, 3 this year. We're pre-seed seed, so very early stage. And our focus is really working with the founders very hands-on with our 40-person team to get to positive unit economics and then get that growth and get to a point where hopefully you don't actually need investment capital, because investment capital come and go. But if you can have a profitable business that is growing, you can survive through the inevitable volatility.
Hi, everyone. I'm Yalena from inDrive New Ventures. We are the corporate development arm of inDrive, and I think many of you guys would probably use our service in Pakistan. And many other emerging markets as well. We are the world's second largest ride-hailing application by download for the third consecutive year. We've also since then expanded into many other services, including courier, delivery, food, grocery, fintech, and many others. So the ecosystem is definitely growing. And Pakistan is one of our favorite markets as well. So we are the number one in terms of market share. Our recent deal is in Crayford. I think many of you guys are aware of this one as well. Super exciting. The company has doubled in terms of GMV since we invested. And our focus is on around Series A companies, mainly in the B2C area. So I know it's a tough area, as many investors would imagine, but that's our favorite, given our root, very much deeply rooted in the B2C space, how we successfully build our user base across 50 emerging markets. So that's where our focus is at.
Hi everyone, Omer Zabit from Shorooq. We're a multidimensional investment firm. We basically have products ranging from pre-seed all the way to growth, credit, and also leading up to pre-IPO, IPO stages. What we've done over the last 8 years is mostly on the venture side, so pre-seed to Series A. MENA focused, our heart of focus is UAE, Saudi, Egypt, and Pakistan. In Pakistan specifically, we have 9 portfolio companies. We've been investing since 2019. The last few years, we've been consistently investing like 1 or 1.5 companies per year, sort of a cadence, despite all that has been going on in the country. On Pakistan specifically, like I know venture is all about alpha, but specifically in our portfolio construction, Pakistan is super alpha. So we want to come in super early at the right economics where there's a huge gap between the fundamentals of the business and potentially the pricing. And we want to continue to support the companies from there onwards within Pakistan as they expand into the region. Because again, this region is home for us. We have very deep LP pools, founders, and also talent across the region as well. Personal background, I think I'm an operator turned investor. I used to work at Kareem, so I don't like inDrive that much. Never really took it in Pakistan. I don't know what that company is. So yeah,
That's how you really feel.
yeah, generally, like I've never really used inDrive. I have a strong affinity to Kareem, despite all challenges in Pakistan.
Thank you. So Aatif, I'm going to come back to you. You touched on this a little bit in your intro. You wrote a piece recently, I think maybe a week ago, 10 days ago, around the Pakistan opportunity and what people are missing and why there are certain tailwinds. So we'll start with the first half of our title, which is the opportunity piece. What do you think is the non-obvious opportunity? Talk a little bit, maybe summarize what you were saying in your article. I mean, your thoughts around how Pakistan compares to other markets that might be in the space, and also why do you think that there are specific tailwinds right now that we can take advantage of?
Sure. So I think the perception gap is just incredible, what I was talking about earlier. So first, the short-term macro is really improved. So inflation, which peaked at 38% a while ago, is now down to under 1%, whereas Egypt is at 12. Nigeria is at, I think, 25. Turkey is north of 40 still. So that's done. The currency has been stable for 20 months within plus minus 3% band, and that's backed by huge improvements in current accounts. So it's not artificially being pegged. And again, other countries that I mentioned, Egypt, Nigeria, Turkey, haven't been able to get to that stable currency after the 22 crisis. The stock market in Pakistan, it's tripled in US dollar terms over just 24 months. It's one of the best performing returns. And despite that tripling, it remains undercapitalized relative to the size of the economy. So the opportunity is there. So that's the short term. The longer term, I think Pakistan's story is super interesting and basically due to 3 tailwinds. So one is because the oil's dominance, it's coming to an end and we're seeing this energy transition. And Pakistan and other emerging markets, their biggest problem is that actually this oil volatility that then creates inflation in the country, that creates current account issues, that creates currency depreciation. So you take the 10-15 year view, actually we're going to see that oil price is going to move lower and lower and we'll have less volatility. So that's a huge plus. And then Pakistan is electrifying, 2-wheelers, 3-wheelers, one of the largest markets globally. It will electrify. We're seeing that happen on the ground with Zip and Easy Bikes, so the multiple startups in that space. So all of that will help. So that's tailwind one. The second one is, the demographics. And I know like people have seen the 250, 240 million number too many times, but that's not the real story. So you have to look deeper and say over the next 25 years, where in the world are the changes happening in the working age cohort. And the numbers are just incredible. I mean, I knew about it, but when I researched for this piece, it just blows your mind. So China is going to lose 240 million people from that cohort of 15 to 64 years olds. 240 million over 25 years, 10 million years. That's the huge reason, like the whole story of, becoming the superpower that's comparable to the US is under pressure. US will gain only 8 million. Europe will lose 100 million. LATAM combined will gain 10, 12 million, all of LATAM. Where is the growth? It's in India, 140 million. It's in Pakistan, 95 million. So Pakistan, even though it's like 1/6 the size of India today, you look at that, it's like 2/3 of India in terms of growth and working age. And then there's Nigeria, which is going to be 110, around 110 million. So these are the three countries that are going to massively benefiting. And then final thing, obviously, AI is a big force and that cuts both ways. So on the one hand, the world is moving towards automation and there's investment in robotics and a lot of jobs are at risk. But on the other hand, that also means that as Pakistan goes into this demographic dividend, we will actually close the productivity gap with the rest of the developed world, right? So it's not a 10x gap anymore. The kids in Pakistan today will have access to pretty awesome, AI for cheap, and they'll be trained on that. So your problems with education and healthcare, I think you can address that. So I think those three tailwinds combined position Pakistan very uniquely, and that's what makes Pakistan such an interesting place for venture.
Yeah, thank you. And I think I'll add one thing there is that we often hear people who are looking at Pakistan, and even in between last night and today, I've had at least 3 conversations where the valuation of the rupee came up. And I think in a lot of cases, this is a very valid concern because has been an erosion of value of the currency, and that's not something that we can deny. But having said that, I think considering that we invest early stage, and most of us on this table, on the stage, are actually taking a bet on a longer term basis and are expecting multiples in terms of returns, right? We're not talking about a 30% return. We're talking about a 3x return, which is 300. So the question that comes in is like, is that depreciation actually eroding that eventual final value? And I think it's not. I think there's something that you can do to build in that expectation to add to your point around like where the economy is at today. William, I'll come to you next. In terms of like we talk a lot about the title as well says seed to scale, right? So a lot of us have invested early stage. We've taken those bets you talked about in your introduction about doing the work that it takes with those founders to help them get to that next stage. We all have companies in our portfolio that are just going beyond that early stage, seed stage side, and are looking now to grow towards Series A, Series B, expand regionally, expand products, get into verticals. What do you look at as that opportunity to really dig in with founders that are at this stage now where they're at that inflection point of how they can take an early stage startup and then, expand and really become a growth company?
Yeah, so I think a lot of the market, you think about the stages of the company by the stages of funding, right? And then funding can be very important because you can take something that you're doing, and sometimes with funding you can make it go faster. But for us, funding is not actually that necessary if you have positive economics, unit economics. If you have a solid business, it can make things go faster. But it oftentimes is not that necessary. So a lot of people, they say, oh, congratulations, you raised your Series B or you raised your Series C. Well, the key thing is that you have a profitable, growing company, and then the recognition is investors come in and want to give some cash, right? So I guess that's the thing. But the key thing, and we don't really talk enough about, is that you have a profitable, growing company, and that's the achievement, not the fundraising. So if it were up to me, I would try and replace the Series C with an IPO, in which all the preferred investors get converted to common and lose all their rights. And at that point, hopefully, the founders have over half the company, or maybe a bit under half the company. But so we're really focused on helping the founders build a company that solves a problem and does it in a profitable way, or in a way where that company could go profitable anytime. The thing about macros, so I don't actually read the news about Pakistan. I mean, we talk to our startups, but I don't read the news because like we had, currency devaluations, political stuff, a flood, like all this stuff. And we made 28 pre-seed seed investments and only 2 dead. And all of these companies are growth companies already. They just did it without funding. I mean, last year was 40 million in investment in the country. One of our companies got a term sheet and they made it through the final IC with IFC for 10 mil, but they ended up turning it down. They didn't want the money. They didn't need the money. That would have made the country 50 million instead of 40. But if you're in a position where you don't need money, then people will give it to you. So I'd say the real focus should not so much be on the macros or where the currency is going. There's going to be volatility. It's going to be a mess. Okay, it's just reality. But if you're putting 20 to 40 to 70% more in people's pockets every month, if you're using tech to drive efficiency, and if you can do it profitably, that's the real focus, and that's a huge opportunity in the market. And so that's why we've done the 28 investments, and we're continuing to invest. And it's Pakistan for Pakistan, and then some of them do cross border, but the vast majority of our companies are just focused on Pakistan.
Yeah, I mean, I think from our experience as well, like in our portfolio also, there are a lot of companies that, so I will take a slightly different perspective to what you were saying, because yes, there's, you don't need the funding, but the funding gives you a bit of breathing room to be able to really focus on experimentation or maybe trying things out. So it could go either way. I think we've also seen that companies that had raised healthy rounds have been able to ride it out because they had money in the bank to be able to ride out the cycles a little bit. So, Omer, I'd love to hear from you in terms of the companies in your portfolio. Where are you seeing those inflection points towards growth, and what do you think is something that maybe you could do or you are doing with your portfolio companies to help them, continue to ride along towards the growth trajectory?
So in our portfolio companies, we have a mix of companies which are squarely building for Pakistan, like started in Pakistan and still in Pakistan, will not materially change that trajectory in the few years down the line. And then there are companies which started there and then either through like our encouragement or their own thought, or even companies which organically expanded beyond Pakistan are also there, right? Omer spoke earlier, Abhi very early on went out. I think some of the earliest founders back in 22 who decided to sort of cut down their business and move were the Zambil guys, the Taza guys. I think all the other guys eventually figured it out 6 months later, but the Taza guys figured it out very early on that they had raised significant capital. That model was not really working out. They pivoted their way through their current model, and they're sort of doing the cross-border thing right now, and the economics of that is fantastic, right? And then there are other companies beyond our portfolio which similarly do take one of the other two choices. Currently, we're helping Collabs, which is a co-working space, very physical capex-driven type of a company, expanding into Saudi, right? So that is also happening across the board. How we materially help, again, the strategy is slightly different. We continue to follow on into the company that we've invested in. From our current fund, we've invested or did follow on almost all of them, right? So I understand the last 3 years was a bit challenging. We were a bit lenient, we were a bit slow on the new tickets, but we made sure that we had enough capital to see through this entire cycle for our portfolio companies, and we help them with that specifically as well. The last big challenge, I think we will talk about challenges, I think, but there used to be good pre-seed, seed stage capital. There hasn't been one for a while, honestly, in Pakistan. I do not think that will change materially in the coming year. So that is one gap we have.
When you say there hasn't been one capital, what are you talking about, at the company level or?
No, like at a Pakistan level, right? So at a Pakistan level, I think there's a dearth of pre-seed, seed stage capital right now. Has been for the last 12, 18 months. I think we're the only regional investor that made a ticket in the last 2 years. I don't think anyone else came in. inDrive did a transaction, but not pre-seed, a bit later. And where the state of affairs is, I do not think that will change in the coming year as well. And on the flip side, all of us have portfolio companies which are at pre-A, seed, A, B. B I'll discount for now, but even the earlier one, there's also a gap there as well. It's trying to open up now a lot more because, again, like macros are phenomenal. The talent is great. Like we invest across Egypt, Bangladesh, Turkey, Jordan, like at Shorooq, right? So you can very easily and comfortably say that Pakistani talent is high integrity, by the way, which is very valuable. A lot of people don't understand that. It's very high integrity, extremely great understanding of what they're building, how they're building it, and have the right exposure. And then you lean on the right type of talent base broadly to build that business in, which is not necessarily true in all of the other markets, right? So from that perspective, I think we're very bullish or continue to be bullish on Pakistan. But specifically for our portfolio companies, it's ensuring that they continue to see through various cycles and to the best of their opportunities, and they continue to scale from there. And our investment thesis in Pakistan is also quite boring. We like simple things. We don't like fancy things too much. Mobility is important. Electrification is important. That's there. Commerce is important for us. Hence, we have Deal Cart. Co-working space is such a trivial thing. Like for a place like Pakistan, whenever I go back to Pakistan, I am from a good background. I cannot work from my home. Like I inadvertently go to a collabs location to work because I do not have either air conditioning or the right internet or people sort of coming in and out. So these are like boring, simple things which we invest in, and we believe that they will continue to build the right foundations for the broader ecosystem as well.
Thanks. Yalena, I'll come back to you in just after this around strategic partnerships and what you've been doing. But just to continue on the theme of challenges, Aatif, what are some of the things that you're seeing for companies that are at that inflection point? What are some of the key gating factors right now? And as a fund, what is Indus Valley doing to help them, go beyond that? Some of the challenges that Omer highlighted, but feel free to add more because there are a lot of challenges that we see. But we also say that if you can build in Pakistan, you can build anywhere in the world. I think maybe Egypt is another country like that, Nigeria perhaps as well. So would you maybe share a little bit more about what are some of the challenges that you're seeing those companies in that inflection point, early money raised, maybe proof of concept done? Is there product market fit there or not? What needs to be done for them to be able to unlock growth?
So Omer mentioned capital at the earliest stage, but I think capital at Series A and post Series A, there's a huge constraint there right now. And to flip it, there is an opportunity, for anyone to start a Series A, Series B stage fund in Pakistan, and I think they'll make a killing. That's not what we are in the business of. We're super early stage, but it's just a function of perceptions and people just being either caught up in the AI in the developed world or focus more on the Saudi and Dubai and MENA region. And to make money, you have to be pre-consensus and you have to be right. So I think that's a very sweet spot for Pakistan. Somebody should do it. The other challenges, like what we've seen is, I think the talent has been a challenge for the last couple of years with people wanting to go out. So, in some cases, it's been your star talent that has been with you for a couple of years and now they want to leave. And my guidance, to our portfolio in that is that, it's something that's inevitable. So you have to go and find talent early before others. So the younger you go, actually, you find the best talent in Pakistan and then you invest in them and be content with, them being there with you for 3 or 4 years. And this concept of tour of duty from LinkedIn that, we do apply, which is be very open and not let them surprise you when they're leaving. And actually have that conversation saying, we'll actually help you find that new role, wherever it is. We're all well connected, we do it. So I think that helps a ton. And then the final thing is, I think AI, things are changing so fast, which is more of an opportunity, but you have to then step away from your core business or at least find some people who can go and learn what's the latest and figure out how to apply, whether it's developer productivity, whether it's customer support. I think if you're not doing it, you're at a competitive disadvantage today. So that's a key focus that comes up.
Yeah. And William, what are some of the things that you look at Orbit? So in terms of the struggles that founders are facing, that you mentioned 28 companies, what are some of the key struggles there? And then how can we help them surpass those?
Well, I mean, one of the challenges is the lack of debt. There's a ton of money sitting in the country. And it's mostly seems to be, I'm sorry, I'm not really a Pakistan expert. I have 20 companies there, but I have no idea why. Okay, so the money, it goes in a bank account and then the banks lend it to the government and nobody lends to business people. And it's usually collateralized, but there's pretty much no ability to get uncollateralized debt. So you're stuck with equity, but it's pretty hard to raise equity in Pakistan recently, as everybody knows. But for the people in this room or the diaspora around the world, I'm sure they have money sitting there somewhere, and to be able to lend it instead of to the banks or the government, you can still get like 15-20% APR for a company that's stuck in the country, and they don't do that. So if somebody can figure out how to unlock all the sort of rupees that are sort of sitting around, and open that up, usually large commercial loans have a much higher default defraud rate or than micro loans, and we can even get up to over 20%, but like 15 would be nice. So that's a challenge that we've been trying to figure out how to solve, and we're probably never going to be the ones to solve it. It's like you guys, but and hopefully you guys, but that is a gap. And if somebody can sort of figure out how to fix this gap, that would be great. But we're very, very positive on the market. I mean, we did 3 deals and they're Pakistan related pre-seed, and this is in the last quarter. So we were there, and technically they're public, but they're pre-seed. You don't like get up and stand and say, yeah, and amazing, when you haven't done shit yet, right? So, I mean, they're out there, and so I think hopefully we'll be doing more. I mean, there are challenges, there are gaps, but we're super excited, as you are, about the opportunity. And yeah, we being from New Jersey, we swear a bit more, but you call it non-fancy. We say boring shit that makes money. Yeah, but really, it's just like digitizing very traditional industries in order to solve a problem, like a buskaro, right? I have no idea that sort of working men and women, men pay, I don't know, this is what somebody told me, right? 10% of their income to get to and from work, but women pay 30% of their income to get to and from work. That's mental. So anyway, we had to chase the CEO of Buskro around for 9 months to take our money, mostly because she actually didn't really need it. But she finally like signed the docs and took the money. Yeah.
Yeah, thanks. I think I'll actually add to both what you and Aatif said, that there's a need for debt, there's a need for later stage of equity. I think there's also a need for founders to have the opportunity to learn from other founders. And as venture investors, I mean, all of us do that, right? We connect our founders with comparables in other markets. We connect them with people that have been there, built it, and have experience of other markets as well, because that unlocks learning where you don't have to make the same mistakes yourself. So Yalena, coming to you, and you obviously you did one transaction with an investment in Crave, but beyond that, being such a strong market player puts you in a very exciting position of being able to bring that knowledge to the companies that you partner with, both from a business partnership and an investment perspective. So can you maybe share a little bit more about like how is that strategic? How do you look at those strategic investments, and what can a company or a CVC or a company like inDrive actually bring to startups in Pakistan with those partnerships and potential investments as well?
Yeah, absolutely. So,
Wasn't me.
yeah. So we are definitely super excited about expanding the ecosystem of service that we have. So we already been doing that across the mobility sector, fintech, just a daily service overall as well. And there's the one way of building everything in-house. There's also another way of you joint hand with another company. So I think for us, it's a mix of both, where it depends on the sector, where that makes sense. So for example, fintech is super technical industry. It's going to take us way longer to probably get into it ourselves. So we have a suite of really strong fintech partners. Some of you are sitting in this room as well, where we are introducing really innovative services into the market. So from our perspective, I think there's a few things we really try to bring to the companies that we either partner with or later invest in as well. I think the first one is we focus on B2C services, which is typically quite tough in a lot of the emerging markets, because people are very price sensitive. So even if you up the price point by a single digit percentage, people are going to respond very quickly and very strongly to that as well. CAC is a huge line item on your balance sheet, and a lot of people, on your financials, and a lot of people really struggle with that. So I think from our perspective, the user base that we've already built is one of the biggest asset that we can very readily bring to our portfolio or partner companies, especially in the B2C space, so that you can basically get the free traffic from a group of users where they are highly loyal to a brand, highly active, logging in on a daily basis multiple times. That is the first one. I think the second one is more of that regional expansion. So I think a lot of the founders that we meet in emerging markets, they are here for a mission. They are not just building for the sake of building a startup, but rather they are really trying to bring change in a market where they really needs a lot of support and bring the access of services to people. So that's what we stand very strongly as well. That's why we very much dedicated to be a emerging market champion. We operate in roughly 50 markets, all in emerging market. There's a lot of similarities between some of them. So this is when once we invest in a company, we're going to take them to some of the other markets where we can find a good fit. So for example, actually in parallel to Cravemart, we also invested in another similar quick commerce company in Kazakhstan. So the first thing that we did was actually fly the Cravemart team all the way to Kazakhstan for them to share knowledge. They operate in the same space, different market, but they have a very different way of approaching the same industry. So there's a lot of great exchange of learnings in the same topic. That was super helpful. And we also fly the team to our LATAM markets, to our South Asia market for them to assess the future regional expansion opportunities. So that's the second thing we really want to bring to our partner companies as well. And I think lastly is the general sort of capital support and the resources, as we have a very strong local operations ourselves. So even if the team is still early on and they may not be able to tap into all of these function, resources, expertise, that's where we can very readily share the things and resources that we already have, be it financial or non-financial, with the companies within our ecosystem.
That's great. And I mean, I can vouch for the business development opportunity because one of our portfolio companies, Easy Bike, I don't know if Ali's in the room right now, but has partnered with inDrive and is able to access inDrive drivers to help convert their motorbikes, their two-wheelers into electric. And there's a real commitment from the company, even though they're not an investee yet. But there's a real commitment from the company to be able to say, this is something that we recognize as a need for our drivers and people that we're working with on a regular basis, and then bringing in resources into them. And as investors, like we all get asked for funding support, but business development is a huge opportunity as well. And I think all of us are trying to connect our portfolio company founders with those opportunities. So Omer, coming to you, what are some of those ways that those companies can help unlock some of these key business development opportunities to be able to expand? And then once you answer that, since Shorooq is a regional fund, can you talk a little bit about how are you then looking at? I know you said Pakistan only because it's simple but boring and a big opportunity. But is there a thesis where you are then looking at some of your portfolio companies scaling beyond Pakistan into some of the markets where you're already present?
Yep. So on the first one, specifically strategic business development, that's one of our pillars on the value creation side. So as a firm, we have a separate partner who leads the value creation. They help with capital strategy, so fundraising and all, strategic business development, and talent. So these are the three pillars that we have specifically for it, and they work exclusively with our portfolio companies on that front. And one thing that you realized, given I think all of us in our own geographies, we do sit across and have access to certain institutes, corporate institutes, which our founders do not have. And then just a warm intro goes a long way. And again, like most of our companies are very B2B. So consumer, we do like only 10% of our entire portfolio is consumer. So on B2B specifically, this goes a long way. And half of our portfolio is fintech. So getting a hold of a bank is never easy, right? And you are able to sort of help on that front. But having said that, I think let's also not overly romanticize all VCs do for their companies. I think it only goes a certain way, and then the founders really drive that conversation and relationship forward. And the conversion is also important there for us to ascertain that, like, should I even continue to sort of spend my own equity or like relationship equity on a group of founders who are not really translating. So that's also, it goes both ways, by the way. So it's important to sort of align there. As far as regional is concerned, in Pakistan, I told you earlier on, I'm agnostic whether you're building in Pakistan for Pakistan or you're building in Pakistan for the rest of the region. I think roughly 18 months ago, I was squarely used to say to all the people I used to meet in Pakistan that I'm looking for companies which are building in Pakistan but not for Pakistan. But that was the view that we had given portfolio construction. And then we realized that, okay, that was a uphill task. And there weren't enough companies which are building there. And even if they were not really venture. They were bootstrapped. They would continue to grow to a certain level. They were profitable lifestyle businesses, and they wouldn't really go from there. So it was difficult to find the right fit there. But at any given point in time, right now, we're open for companies who have a vision to go beyond or not, right? From our existing portfolio companies, again, Omer at Abhi has expanded. This was before us coming in, so it's completely his and his team's.
So we were there.
Yeah, you were there, right? So that's one. Omer at Postex is expanding to UAE, Saudi. Omer from Collabs is again expanding. We have a lot of Omers in our portfolio. And
Any founders in the audience called Omer? Please talk to Omar.
Aatif, I already met two.
And your name has nothing to do with it.
Yeah, nothing.
There's no affinity there.
Surprisingly, I have a unique way of spelling my name. The two founders I met, Omer, were the same Omers. But anyways, that's a side topic. So yeah, that's broadly how we think about it. But it's not really a prerequisite. We know that we can add a lot in tremendous value, specifically in UAE and Saudi expansion. But not every business is built to be expanded beyond Pakistan. Not every founder is the right founder to build it outside of Pakistan. So again, we are early stage investors. It is very specific. There's no set formula. So we need to sort of be wary of that as well. But again, those markets are huge depending on the business model that you are in. Like for instance, Zip, the company that we've invested in, Aatif and I, electrification one, I do not think it's a fit for Saudi at this point in time. No one really drives a motorbike. It is a fit for UAE. It's a fantastic company for Pakistan, right? Or the opportunity. There's a fantastic one for Pakistan or for Egypt or for Bangladesh. But it's not really a thing for certain things, and you cannot really force feed that as well. So yeah, that's the broad.
Thanks. And Aatif, coming to the challenges that founders face, you mentioned talent, and you talked a little bit about that strategy. What can we do? What can founders think about when it comes to challenges around later stage funding not being there? There's only so much, we're early stage, that's our lane, we're staying in it. Most funds in Pakistan are sector agnostic. But what can you help a founder with if there are regional investors? Let's put Shorooq aside because they actually have been actively investing. But there might be other regional investors that have not invested in Pakistan. There might be global investors that came in 2019, 2020 and now have stepped back. What can a founder do to help unlock that scale? Other than, and I'll come to you after this, William, because you mentioned cash flow and positive and make money so that you don't need that funding. But if they are not in that situation where they're making enough money to fuel growth, what can they do? Where does that money come from?
It's not easy for sure. I think the expectations around what it takes to raise early stage, and even that is not easy, versus as you progress later and later, what it takes to raise those rounds, it gets 10x harder. You have to spend just way more time because the check sizes grow larger. The number of people will be focused on Pakistan or the region who will have that ability to write that check size, that list shrinks very rapidly. So what it takes is actually getting out there, using your entire network, spending time in the US, in the region. The interesting thing is that you cannot predetermine what kind of investor. At seed, you can figure out, here are the 10 seed investors who invest in Pakistan, or 15, and these are my top 3, and I'm just going to prioritize for that. Later stage, I think you just have to keep an open mind. And earlier we had, founders of Kareem and EMPG, not Bizzle. Their journeys are very illustrative for that, because when they were raising their later stage rounds, even MENA wasn't a preferred, market. So what they had to do, I mean, Imran would tell you any day, like, he spoke to hundreds of investors to get that. And Mudassar, he tapped into family offices. So you go everywhere. And I think like one founder, like it becomes their, core part of the job is to do that and plant all the seeds you can. The other thing that starts to help at that point is you have real metrics. So Now you can draw that comparison and you can say, look, if I'm building a B2B e-commerce company, that model, like every emerging market started with that. In many places, like it didn't work out. And here it's working in Egypt with these sort of set of metrics. And here are my metrics, right? So you can draw that comparison. And I think later stage investors, they are much more spreadsheet driven than, vision driven. At that stage, that makes sense. So that plays to your advantage, So just having that awareness and knowing what it takes, what others' numbers are. And part of that is building those relationships with those founders in other markets as well. And guess what? It's hard in Pakistan, but it's also hard everywhere else for emerging markets. So people are actually open to that. You just have to, reach out and build those relationships, share your data, get their data, and keep at it. It's not going to be easy.
Yalena, when you talked about strategic investments and, partnering with companies, what are some of the things that you look out for in terms of, what Aatif was mentioning is like, what is the secret sauce to catch your attention? Like, what kinds of companies would you want to partner with? Like, what are some things that founders can keep in mind as they build for strategic partners, strategic investors?
So for us, there's a few things that's probably a little bit more specific to inDrive as well. I think the first one is the audience that you serve. That's one of the first questions that I ask as well, because we have a very clear mission of targeting the mass market. And of course, as we become the market leadership in a particular market, we're going to expand to other segments. But we always go into a market with a very clear goal of we're not here to serve the top 2% of the population, but we are in the emerging market for a reason, to serve the mass market. So I think that's the first layer of filter, to really make sure we are aligned with what we are trying to do. There's a fit in terms of what you're building. One simple example of as we are kind of making product changes ourselves so that we can suit a more suite of partners. One of the things we just keep talking about is we do the mock-up, let's say on Figma. And then our local teams are going to come back to us to say that this looks really nice, but that's like an iOS device markup. Like, do you have an Android small screen with huge fonts markup? Because this, when you change it to a iOS phone, which is maybe like 70% of the market, it's going to look completely different. So it really comes down to if you have a very clear target audience in mind, and if you're building a product that's going to serve that mass market with a very different set of behaviors, that if you come from like a different purpose, then you would just be completely unaware of. And I think quite related to that is definitely the mission side. So we are super clear in terms of our focus of bringing equitable access to services to the mass market ourselves. So I think having that mission in mind is also a big filter that we would have as well. I think many of you guys here probably know the inDrive story, which is quite wild, coming from the coldest city on earth, and a group of very non-traditional founders kind of rise up to a global player. So I think because of that story, we have a huge passion, as we call it internally, hidden gem or underdog, once in a time. And I think that's how you rise up the ladder, which matters a lot to us from a humble beginning, and then how you build the market for the right audience. So that's another big filter. And I actually really resonate with William's point about the financials. So maybe from the partnership perspective, it matters a little less. But when we consider our investment, we have a slightly different, set of preference or criteria compared to the traditional VCs. We're not here to look for the next sort of 100x valuation type of company, but we are really looking for a solid company with very sustainable, stable growth. It may not skyrocket, but it's very stable. We know this is going to be sustained. The financials is healthy. I think that's one of the things in the emerging market, everybody gets super nervous, is you run out of cash because you've put all of those into growth. The growth story is amazing, but then if that cannot continue, that's not the best thing in the world. So we place a lot of focus on that. So we would much rather pick a company that may not have the most amazing growth, the sort of hockey stick there, but really healthy financials. And we've seen that if you get really creative, really know your audience, even if you are serving the bottom of the pyramid, even in terms of lending, you can keep the MPR really, really low, surprisingly low than maybe serving the higher class. So that's what we are super strict on in terms of the operational and the financial metrics as well.
Thank you. I'm getting eyes from Timur on time. So I do have one last question, but we can keep it short. So if you were able to wave a magic wand today, and have one thing change that will make you double your portfolio of investments in Pakistan, what would it be? Whoever wants to go.
So I just kick off. So I think, these gatherings are amazing. So we all get together. But what I spend a lot of my time going to Europe, sometimes the US. And the reason is that we need to do a little bit more PR. Because if we leave it to mainstream media to describe Pakistan, nobody will invest in it, let alone freaking visit it. Well, that's probably what most of the world thinks. Okay. I don't read the media that much, but yeah, it's kind of depressing. So I don't, especially about Pakistan, because it's all negative. So I mean, I spent a significant amount of 2006 working with Jack Ma and Alibaba and helping them get ready for their first IPO. And the key is it's not just about describing like Alibaba and what they do. It was actually describing what China was and what they did, because nobody in America, where the money is or was, knew anything about China. You say China, there's like laugh at you, oh, like panda bears, haha, right? And so there's a the role that we could wave our magic wand is to go out there, and it's great to talk with each other, but we're all like have the same affinity. But going out there and doing a little bit better job on PR. And so we basically have a list of people who are theoretically willing to invest in Pakistan, but we got to go, it's like hunter killer, going out trying to find them. And then the second thing is, when we talk about Pakistan, we don't talk about the macros, don't even talk about Pakistan, just talk about the numbers that you're seeing in the companies. Because if you show growth, profitable growth, margin expansion, and greed takes over. It's kind of like natural among investors. Greed takes over, and then you put that and juxtapose that against all the crap that's happened in the market over the last 4 years. And so, I mean, we have a company in Bangladesh, and they tripled their GMV last year to $300 million without funding in the middle of a war or a revolution or whatever you want to call what happened. So it really doesn't matter. You cannot stop this change. So if we could make the magical wand and work on our PR game a little bit, that'd be great.
If we could have, 10 early stage pre-seed seed funds with 10 to 20 million each, I think everything will follow from that. So that'd be my pick.
I would like to see local capital being involved in I think it did like 8-10 years ago, and it didn't really fare well. But I think debt aside, but there's a lot of local capital just sitting on the sides, not doing much. And even if it's doing much, they have I think the PR issue is also there internally, right? So forget MENA, forget US. Like everyone who has tens of millions of dollars doesn't really deploy into Pakistan. And even if they do, they would rather choose to do it in a very orthodox way, and they do not really believe the entire narrative. So I think that would be an important one.
I'll start with a more smaller one first. I guess whenever you are in Pakistan, then just use inDrive. You bust a market leader, and then we'll definitely come back for more investment. But jokes aside, I think I definitely echo with all of the above. And I think probably one extra point is just like the government support as well. So we were super excited about the lending space in Pakistan because financial inclusion just like one of the single necessities in the market. And there was a regulation, I think, that was almost like implemented as well on this additional tax if you don't sort of allocate a certain percentage to the private market. And a few months later, that was gone. So I think we saw that coming, but there's like still this back and forth, and it's not entirely predictable. And also, I think like just the money is not flowing to where it needs to be from the top down level support perspective. So I think if we can align that would be super exciting for the ecosystem as a whole.
Great. Thank you. And great points from everybody. I think what I'd probably add also is that if we see a couple of big exits, the story will tell itself. And that kind of comes into all of the points that you've said. Like the money will be made, government will sit up and take notice. Others will, start looking at Pakistan, and greed will conquer all, or at least bring in unlock some investment that we haven't been able to as yet. Taimur, I know you've been trying to stand for the last 3 minutes. This is your moment. Thank you, everyone. Thanks to the panelists for a great chat.